host, Alan Porter. Alan, what's going on, man? How are you?
I'm doing great, Neil. How you been doing?
I'm doing great, and I'm excited about today's topic. This is something that every business owner needs to hear. How business owners can stop overpaying taxes before 2026 tax changes. What is exactly happening in 2026 that business owners need to prepare for right now?
Well, in 2026, the Tax Cuts and Jobs Act sunsets, meaning most of the current tax breaks for business owners will expire. Marginal rates will rise, the 20% qualified business income deduction could disappear, and estate tax exemptions will drop by nearly half, but I think that's being changed by Trump's policies. If you don't take the action before December 31st, 2025, you'll face higher income, capital gains taxes, and estate transfer taxes.
Interesting. Why are so many entrepreneurs unaware of the impact these changes will have on their business and personal wealth?
Well, basically, they've been very, very busy the last few years with inflation, labor costs, and market volatility. It's distracted owners. Plus, many assume Congress will fix it later. And we know how that's going. They can't even get in business open the government to pay people. It's crazy. Like I said, Congress says they'll fix it later, but the law already says these tax cuts expire. Waiting for Congress to act is not a strategy. Planning now is how wealthy business owners stay ahead and legally keep more than what they earn. It's time to think outside the box, conventional financial planning.
No doubt. And what specific steps can business owners take right now to lower taxable income before 2026?
Well, there's several. You can accelerate deductions, make major contributions or purchases while rates are low, defer or split income strategically across different entities, set up a defined benefit plan or cash balance plan to create huge deductible contributions. This is an absolute great plan. A bonus depreciation. Take advantage before it phases out. All these can save 6 figures or more, especially when coordinated with holistic wealth strategies.
How can tools like cash value life insurance and annuities help business owners lock in lower rates before rates rise?
Well, Neil, they create tax-free buckets of money under IRA code 7702 and 70E. Cash value life insurance grows tax deferred and can provide tax-free income later. But as I've told you many times, Neil, cash value life insurance and fixed index annuities, I do not deal with the variable annuities because they have high fees and they're tied to the market. But they eliminate, when properly structured, they will eliminate or mitigate all the risk in retirement that a stock portfolio only compounds. Money market funds, CDs, mutual funds, they only compound those. And people don't understand. It's not about rate of retirement it's not about rate of return in retirement. It's about distribution of your assets.
What about business succession or exit planning? How will 2026 tax changes affect owners looking to sell?
Well, Neil, if you plan to sell or transfer your business, 2026 could be costly. Capital gains taxes are expected to rise and estate tax thresholds will shrink. Smart owners are using installment sales, charitable trust, and life insurance by fund agreements to now lock in today's favorable rules. Waiting until after the sunset could mean paying millions more in taxes. They've got to act now. You got to be proactive.
And there's a way to really decrease their taxes in 2025 as well if you contact Alan today, right? Alan, that's the key thing is you have a team of professionals. Explain that.
Absolutely. I have a team of specialists that are on my team. And what I mean by specialists, Neil, let's say that I'm your family doctor, okay? I can treat you for minor illnesses, minor injuries. But if you want your knee operated on, you want an orthopedic surgeon, the specialist. And that's what I have on my team, top tax-specific attorneys and CPAs and other specialists, and we collaborate together to come up with solutions for people's financial problems. And most people, they don't have specialists. They just have their doctors, their CPA, their financial advisor, and their attorney. They don't specialize in anything. And 2 questions I always ask, especially affluent clients, Neil. When's the last time any of your advisors ever gave you any proactive advice on saving taxes? It is slim to never. And the other one is you may have the greatest advisors in the world, but it's what they don't know that's going to end up costing you hundreds of thousands, if not millions of dollars, on undue taxes, fees, and lost opportunity costs, Neil. And they all agree with it. And I said, well, but what do you mean, Alan, by lost opportunity cost? I said, what if we could show you a tax strategy that you'll receive money back and you could pay for a tax-free retirement that's paid for by Uncle Sam through tax saving strategies that we do for you? It's no money out of your pocket. In fact, it's money coming back to you because if you had not contacted us, you'd be paying all these taxes. You never would have known it. But Neil, I don't charge my consultation services. They can call me at 910-551-1046 or my email address is strategicwealth0@gmail.com. But everybody can go to my website. I have a plethora of information from videos to blogs to newsletters. Everything is in there. That is a www.strategicwealthstrategies.com.
All right. That's fantastic. It's such a great thing. That tax calculator is available there too. And that's eye-opening, isn't it?
Yeah. Yeah, that tax calculator, when you put the numbers in there and you see all the numbers pop out right back at you, it's scary.
Absolutely. All right. That was the Strategic Wealth Strategies podcast, guys. Take care.